Okay? It's 50 bucks a point, 12.50 a tick. A tick is one of those right there when it moves up and down, one tick. A tick is a transaction. When we use tick charts, they're transactions. A transaction can be one contract or many contracts. We use volume charts as well, range charts also. I'll explain those kind of charts to you in a minute. But the volume charts is the actual volume, the number of contracts traded. Tick charts is the number of transactions. It's not related to volume at all. This chart right here is a 400 tick chart. What we're looking for is really just three things. You know, I have the bar colors on here. The bar color is it shows when trends begin and end. That's what the bar colors are showing. Now, ignoring the bar colors, we would just be looking at this one line right here, which is the MA1, CFMA1. This down here, which is the DMT, the CF DMT, and this down here, which is the CF cycle. What you want is for all of them to turn the same color, price to move away from and pull back to the MA1, like it did right here, like it did over here. Now you want it to do this before the cycle is oversold for a short or overbought for a long. See, I didn't mark this pullback here. Over here, let me just make sure hang on a second. This one right over here. I didn't mark this pullback because you can see down at the bottom the cycle was overbought at the time. However, over here, the cycle was not oversold. Over here, the cycle was not overbought. So you would have been looking to go short down here, long over here. When we do this on the 2097, we use a 2-point bracket. This is a 400 tick. That's why I was moving my stuff around a little more. It was a 400 tick, and we're going into the low right over here. We're going to the pivot low. It moved quickly to the pivot low, and I said once it did that, I was going to move my stop to break even, which I did. And I eventually got stopped out at break even on it. But it did have 6 ticks of profit in it at one point from my entry, which was right here at 725. Now that's basically all you're looking for is three things: blue, blue, and blue, and a pullback. Red, red, and red, and a pullback. The DMT indicator is direction, momentum, and trend. That's what the D and the M and the T stands for. The envelope shows you direction. If it's red, you're looking short. If it's blue, you're looking long. This line right here, that's, what do we call it? Fuchsia and green. That shows momentum and trend. If it's green, the trend is increasing. The trend strength is increasing. Whether it's an uptrend or a downtrend, if this thing is green, it shows strong trend strength. Okay? If it's going up, it shows momentum and trend strength. So what you like to see is this right here. You like to see it pierce the bottom of a red envelope for a short. That shows good short trend strength, or good selling strength, I'll say. And the same thing when it pierces the bottom of a blue envelope over here. See, that shows good buying strength right now, good long trend strength. Now the actual entry in this would have been somewhere over here, right in here, would have been the entry on this. Of course, I would have waited until it got above these dots. But if you're in the trade and you're waiting for it to get 2 points, and you pierce the bottom of the envelope like this with good, strong trend strength like this, you know, the chances of you getting 2 points out of that is really high. That's all there is to it. It's the same thing across all the different markets. Okay. Now the markets that we're looking at right here, this one is gold, and the arrows that I put on identified a chart pattern, not necessarily a sandbox pattern, though this one right here was also a sandbox entry. This here was a sandbox entry. Over here was a sandbox entry. I like the cycle to make a complete cycle all the way up and down, so I wouldn't have taken this long right in here. Over here was nothing because the DMT was blue. But you can see on the different markets we're using the same exact setup. Okay, this right here would have been a short. This is the YM, which is the mini Dow. Right here the DMT didn't agree. We didn't have a full cycle. Over here, by the time it pulled back in, yeah, that was a long, but it was going right into resistance. The resistance dot's right here, so I would have waited on that.
And Michael, just a side note here, why, if someone asks, why 300 ticks for the YM, why 6 ticks for the NQ, why 4 ticks for the 6E?
It's based on volume and range, overall range, average true range. That's what the 6-tick and the 4-tick and the 3-tick range charts are based on, the average range per bar. And the 400 ticks that we're using and the 300 ticks for the YM, that's based on the overall volume. If you don't, well, not so much the volume, but the overall activity. Because it's a tick chart, volume is irrelevant, but the activity on the contract. You know, if there's a lot of transactions, like with the ES, we have, you know, generally speaking, we have a couple million in volume daily, and we have a lot of transactions. You know, if you have a couple million in volume, you might have, you know, 500,000 transactions a day, maybe less than that. I'm not sure how many exactly, but with the ES, you can go up to bigger tick charts, like the 2097, and we go up even higher than that. Dwayne's got a 13,400 tick chart or something like that somewhere. But with, you know, when you have a lot of activity, you can use bigger tick charts to sort of smooth it out and reduce the number of trades. You know, we've gone down to the 400 tick chart here because the last 2 or 3 weeks we've been range bound the last 2 or 3 weeks.
Michael,
So
have
when
you
you're
got
range bound,
50,000 share chart available?
I can put one up.
Which, by the way, folks, that's on this platform. It's a 50,000 contract chart, and that's really what we're talking about because we're trading futures contracts, not shares of equities. So
Oops.
every time
I'm typing the wrong thing.
every time we use a 10,000 contract chart, you'll see that on our screens every day. But you can also go out. I want to use this as an example of a bigger time. So every time 50,000 contracts change hands, a new candle is created.
Yes, this one is not there yet, but give me just a second. I will put it up here. Now this is how you create it. This is volume based. So we're going to do 50,000 contracts.